Welcome to the Deep Dive, where we take the weekly stack of analysis, research, and data from WeWire and distill it into the crucial takeaways you need. I'm John.
And I'm Wendy.
And we are staff at WeWire, here to guide you through the core insights from this week's StayWired recap.
Our mission today is to really unpack an economic truth that's driving so much of modern consumerism. It's this radical divergence in financial power between Gen Z and baby boomers. We've been tracking it and, well, we're calling it the Great Wallet Split.
Okay, let's just jump right into that because the numbers really tell the story here. You've got Gen Z, born roughly 1997 to 2012, and then boomers, 1946 to 1964. And they're living in, two completely different economic worlds.
They absolutely are. In the U.S., older generations hold just the vast majority of assets.
It's staggering.
The sources are definitive. Americans over 55 own about 73% of the national wealth, and boomers alone, they're holding over half, a stunning 52%.
I was just struck by that, 52%. And by contrast, you have younger adults, so millennials and Gen Z combined, and they hold just about 11%.
11%.
So that generational wealth gap, it just means boomers have this immense flexibility in their spending. But for Gen Z, it dictates everything.
It really does. It creates this kind of systemic pressure. You see it borne out in the income data, for example.
How so?
Well, only a minority of Gen Zers even have an income of $50,000.
Wow.
And here's the kicker, the thing that just shows the intensity of their financial strain. On average, Gen Z spends twice as much per month as they save.
Twice as much.
Yeah, they are financially running just to stand still.
So, okay, that's the foundation. You have 52% wealth for boomers versus a combined 11% for millennials and Gen Z. This isn't just about different tastes, is it? It's about access to resources. How does that chasm dictate what they buy?
It fundamentally changes their relationship with the idea of value.
Okay.
Boomers, with all that security, they can afford to prioritize, let's say, longevity, stable assets. They can wait for a deal, or they can view a really high-cost item like a car or a new piece of tech as a long-term investment.
Something that will last.
Exactly. Something they might even pass down.
That makes total sense.
Yeah.
But for Gen Z, they're coming into adulthood with crippling student debt, soaring housing costs.
So much higher than their parents faced.
Oh, absolutely. And a job market that can feel, a lot less reliable. That pressure means their spending has to be hyper-efficient.
Yes. And that's why Gen Z reserves cash for the true essentials first. Rent, bills, just the cost of existing.
And after that?
After that, they have to be incredibly intentional with what's left. And that often translates into what you could call an experience budget.
See, this is where it gets really interesting for me. Because despite those tight budgets, Gen Z refuses to give up on experiences. They prioritize travel, festivals, dining out. Doesn't that seem, contradictory?
It does on the surface.
How can a generation that spends twice what it saves still afford to travel?
And that is the core tension of the Great Wallet Split. They manage it through something we're calling soft saving. It's not contradictory. It's more like calculated escapism.
Soft saving. Tell me more about that.
They budget meticulously, using spreadsheets or dedicated funds to save for a very specific high-impact goal, like that trip or that concert ticket.
So it's hyper-intentional spending aimed at fulfillment, but fulfillment now.
Exactly right. Our data shows that even though 60% of Gen Z earn under $50,000, they still take multiple leisure trips a year.
How many are we talking?
On average, around 3 trips per year.
Wow.
And they do it by becoming masters of value seeking. They leverage loyalty programs, points, aggressive deal hunting, anything to maximize those limited dollars on high-impact moments.
What's fascinating there is the psychology behind it. It's partly cultural values, right? Seeking fulfillment, sharing moments. But it's also just a reaction to their economic reality.
It has to be.
If long-term wealth feels impossible to build, why sacrifice today for a future that might never even materialize?
Precisely. They are trading the accumulation of physical stuff, which they often see as disposable or just unaffordable, for these unforgettable, even if fleeting moments. It's high-impact spending, that kind of thing. Yeah. It eases the anxiety of that long-term economic impossibility.
So it sounds like boomers are perfecting the art of the Costco run and adding a new wing to the house.
Right.
While Gen Z is perfecting the art of the perfect Instagram story from a place they scrape together every penny to visit.
That's a great way to put it. And it brings us right to the boomer perspective. Their spending is driven by security. by long-term value. Their life stage means many are retired or getting close to it, and their spending reflects that. They're leveraging the assets they already have.
And when you look at that accumulated equity,
Yeah.
it's just staggering. Americans 65 and over control something like $19 trillion in home equity.
19 trillion. It's nearly 40% of all U.S. housing wealth.
So how does that massive security net change their day-to-day spending?
When you have that kind of stability, a paid-off mortgage, investment gains, your purchases shift. They shift toward preserving and improving the nest.
So home improvements, healthcare.
Exactly. And highly durable goods. They value longevity because they expect that item to last them through retirement.
What I found surprising in the analysis, though, is how intensely thrifty they are, despite all that wealth. They're highly price conscious, way more likely to seek out deep discounts, use loyalty programs, buy store brand products.
It's the habit of wealth preservation. They show fierce brand loyalty in essentials. We're talking 76% loyalty for groceries.
But they'll switch.
Oh, they'll switch in a heartbeat if the cost is better or there's a good deal. They are highly attuned to bargains, even with leisure. They might book a vacation spontaneously, but they're still looking for the package tour or the special offer.
So we have two completely different approaches. Boomers are focused on that buy it once quality, adding value to assets they own, using their paid-off status to be value conscious.
Right.
And Gen Z is optimizing for fleeting, high-fulfillment moments because those big accumulated assets feel completely out of reach right now.
And that contrast, it really helps us understand why the spending split is so stark. But it does raise a big question.
Which
is this generational split just a U.S. thing, or is it a global reality?
The sources suggest this is. Yeah, this is widespread.
Yeah.
If you connect this to the bigger picture, look at OECD data for advanced economies, you see very similar parallels.
So older groups accumulating assets.
While younger adults globally are facing higher and higher barriers to get in. Stagnant wages, high costs, the whole package.
And it's most acute in housing, right?
Definitely. Younger people today are significantly less likely to own a home than their parents were at the same age. And that's true in Canada, the UK, all across Europe. The economic ladder just feels taller for this generation.
And that has to feed into a kind of shared pessimism.
It does. A Pew MF study found that in most advanced economies, a majority of people, both young and old, expect the next generation to be worse off financially than the last.
Wow. That is a massive shift in outlook.
A huge shift.
And if you dig into why that pessimism is there, it's the scale of global debt, the feeling that the ladder's been pulled up, the weight of structural costs. And that outlook just fundamentally shapes your spending philosophy, especially for Gen Z.
So if we synthesize all this, the generational divide in spending is really about how each group defines value.
And that definition is driven entirely by what resources you have available.
Assets and security for boomers versus immediate high-impact experiences for Gen Z.
Exactly. Which brings us to the so what question. You know, for businesses and policymakers trying to reach these two huge consumer groups.
Right. The split means you need tailored strategies. You can't use a one-size-fits-all approach.
Not at all.
For Gen Z, businesses need to offer authentic experiences, flexible pricing, and loyalty programs that give you immediate rewards.
Like travel points or concert discounts.
Yeah, something tangible and fast. For boomers, the strategies have to reward that long-standing brand loyalty and cater to the value-seeking. So discounts, bundle deals, a focus on quality, and ease of use.
And it's so important to remember that this whole divergence, it's driven by forces much deeper than just taste. It's financial necessity versus financial security.
It's an economic reality first and a cultural one second. Okay, we've covered the deep dive into consumer behavior and the Great Wallet Split. Now let's see how the general economic movement this week is either supporting or challenging those generational realities as we move into the Market Movers recap from the StayWired report.
Okay, let's start with the global picture. We saw German inflation confirmed a bit lower in November, landing around 2.6%. Meanwhile, in the U.S., there was a noticeable shift in the labor data. Weekly jobless claims saw their largest increase in nearly 4.5 years.
Suggesting maybe some seasonal softening in the job market.
It could be, yes.
We also saw the Federal Reserve continue its path of gradual adjustment. They cut rates for the third time this cycle.
But the messaging was key.
Very key. Chairman Powell signaled a much higher bar for any more cuts. He's basically trying to manage expectations, reminding everyone inflation is still a serious concern.
And tying into tech trends, we saw OpenAI actively boosting its cyber defenses. That's a clear response to how fast AI is advancing and the growing need for really sophisticated security.
Okay, let's move to the FX corner. Looking at the major global currencies, sterling has been a real standout among the G10.
It's appreciated sharply this year.
Yeah, and that mostly reflects the surprising resilience of the UK's labor market, which has kept the currency pretty strong.
We also saw consistent strength from the Canadian dollar year to date, up significantly. And importantly, the Chinese yuan continues to be very resilient against the US dollar. It's showing that controlled stability, even with all the global volatility.
And looking at Africa, we saw some interesting dynamics. The Ghanaian cedi remains significantly stronger year to date, a really robust recovery, despite some short-term softening this week.
And the Kenyan shilling has been remarkably stable. It's continuing to track well against the dollar.
The South African rand also appreciated a bit this week. It was helped by a modest improvement in investor sentiment and slightly softer U.S. Treasury yields. It's still a bit weaker over the whole year, but that recent movement shows some temporary strength.
Okay, let's turn to commodities. Oil prices were a bit mixed, but they ended the week trending lower. Brent crude was hovering in the low to mid $60 per barrel.
And the key takeaway.
Well, both Brent and US WTI crude were on track for a weekly decline of over 3% overall.
It's driving that drop.
It's mainly persistent demand concerns globally and forecasts of a potential supply surplus heading into next year.
What's fascinating here, though, is gold.
Oh, absolutely. Bullion just sustained its bullish trajectory. It rallied to near multi-week highs, hitting levels around $4,286 an ounce.
And why so strong? It's the classic safe haven demand, right?
It is. Investors flock to gold when they fear economic instability. And those soft U.S. jobless claims we mentioned earlier, they fueled expectations that the Fed might have to ease up soon, which just drives more money toward the metal.
All right, finally, let's quickly touch on the week's most active stocks. And of course, the disclaimer.
Yeah.
This is for informational purposes only and is absolutely not financial advice.
So important.
We saw strong interest this week in tech leaders like NVIDIA, which is maintaining a strong buy rating in the technology sector.
NIO and Apple were also highly active on trading floors. Both of them are carrying buy ratings in their respective sectors.
American Airlines in the industrial sector and Tesla rounded out that heavily traded list. Always do your own research or consult with a qualified financial advisor before making any investment decisions.
Yeah, absolutely.
So what does this all mean when we bring it back to the big picture? The Great Wallet Split. It's a perfect encapsulation of how economics really defines culture. This spending divergence we see between Gen Z and Boomers, it's not an accident. It's not just different tastes. It's a structural reflection of who has the resources and who is trying to find value without them.
And here's a final thought for you to consider, based on all the material we looked at this week. If current global trends, supported by that Pew IMF data, suggest that the next generation will be financially worse off, how might the economic pressures we see driving Gen Z's experiences over stuff behavior, how might that become the default for everyone facing those same wealth barriers, regardless of their age?
So you're asking, could intentional, high-impact, short-term spending become the new normal for all of us?
It's something to think about.
A profound thought to end on, suggesting a future where maybe even the wealthy adopt the mindset of the cash-strapped. Thank you for joining us for this deep dive into the weekly StayWired recap and market movers.
We'll be back next time with more insights. We're John and Wendy, staff at WeWire, signing off.
StayWired Weekly Recap was produced by WeWire,
a B2B company, bridging the banking gap between emerging markets and the world.
Tune in same time next week for the StayWired Weekly Recap.